$50. That's all I put in. 7 days later, it was $3,000. No, this isn't a scam thumbnail. I'm going to show you exactly what happened, trade by trade. But before you get excited, this is scalping, the fastest, riskiest way to trade crypto. Scalping means making dozens of tiny trades a day, trying to catch small price moves before they disappear. Most people lose doing this. I almost did too. On day one. Let's rewind. Day one, 9 a.m., I opened my exchange app with exactly $50. My plan was simple. Small trades, tight stop losses, and never risk more than I could lose. A stop loss is just an automatic exit. It sells for you if the price drops too far, so you don't lose everything. My first trade, Bitcoin, 1 minute chart, tiny position size. I bought at the bottom of a small dip, expecting a quick bounce back up. 90 seconds later, a 2% gain. I closed it immediately. 2% sounds small, but on $50 traded repeatedly, small adds up fast. That's the entire idea behind scalping. Not one big win, but many small ones stacked together. But here's what nobody tells you. Every trade also comes with a fee. Trade 50 times a day, and fees alone can quietly eat your profits. So by hour 2, I had a new rule. Fewer trades, higher quality setups. I started waiting for clearer patterns instead of jumping at every flicker in price. By the end of day 1, my $50 had grown to $63. Not huge, but a 26% gain in one day is not nothing either. Day 2 is where things got interesting, and where I almost blew it all. Day 2, morning, balance $63, confidence a little too high. After yesterday's win, I got greedy. I doubled my normal position size. Bitcoin looked like it was about to break upward. I jumped in fast, no real confirmation. Instead of breaking up, price reversed hard. Within seconds, I was down 10%. This is the moment most scalpers panic and make it worse. I almost did too. My hand hovered over sell everything. But my stop loss had already been set before the trade. It triggered on its own. I lost $6 on that trade. Painful, but not catastrophic. That's the entire point of a stop loss. It protects you from yourself. Without it, one bad trade can wipe out days of small gains in seconds. After that loss, I stepped away from the screen for 20 minutes. Scalping isn't just about charts, it's about controlling your emotions between trades. When I came back, I cut my position size back down to normal. New rule, never trade bigger just because the last trade won. The rest of day 2 was slower. Smaller trades, smaller wins, steady progress. By the end of day 2, I was back up to $71. 2 days in, and I'd already learned the most important lesson in scalping. It's not about being right every time. It's about losing small and winning slightly bigger. Day 3, I wanted to understand why some setups worked and others didn't. So let's break down the actual pattern I was watching for on the charts. The pattern I looked for was simple: a small pullback after a strong upward move. That pullback often meant the price was pausing, not reversing. I'd wait for the price to stabilize, then enter right as it started climbing again. This isn't a magic formula. It fails plenty of times too. That's why the stop loss matters more than the pattern itself. On day 3, this pattern worked 4 times out of 6. 4 small wins, 2 small losses. Net result, still positive. By the end of day 3, my balance moved from $71 to $89. 3 days in, and the small, boring, repeated wins were starting to add up. Day 4 is when I made my biggest mistake of the entire week. I saw a huge price spike on a different coin, not Bitcoin, and chased it. Chasing means buying after the move already happened, hoping it continues. It's one of the most common scalping mistakes, and I knew better. Seconds after I bought, the price reversed and dropped fast. My stop loss saved me again, but this time the loss was bigger, $12. $12 doesn't sound like much, but it was almost a full day of progress. Gone. That loss taught me something crucial. Stick to the coin and pattern you actually understand. Jumping between different coins mid-strategy is how most scalpers lose control. So I closed my laptop, took a walk, and reset for the second half of the week. Day 5 was about discipline. Doing the boring thing on repeat, on purpose. Day 5, morning, balance, $77. Plan, back to basics. Only Bitcoin, only the pullback pattern, only the same small position size. No more chasing spikes, no more doubling up after a win. The first trade of the day followed the plan exactly, and it worked. A small, clean 2% gain closed on schedule. Then I waited. No trade for almost 40 minutes. Waiting is the hardest part of scalping. Doing nothing feels wrong when you want action. But forcing trades is exactly what caused my worst loss earlier in the week. So I waited for the pattern, not the boredom, to decide my next move. Second trade of the day, another clean 2% win. By midday, 5 days in, my balance crossed $100 for the first time. $100 from 50, doubled in 5 days. But I wasn't done yet. Day 6 is when the market gave me something different, real volatility. Volatility means bigger, faster price swings. More opportunity, but more danger too. On volatile days, I actually reduced my position size instead of increasing it. Smaller size meant smaller wins, but also much smaller risk if things went wrong. That single decision protected me through 6 fast trades in just 1 hour. 4 wins, 2 losses again, but the wins were slightly larger than the losses. By the end of day 6, my balance had grown to $142. 1 more day left. And day 7 is where things escalated fast. Day 7, morning, balance, $142, 6 days of small, consistent trades. Then, Bitcoin did something unusual. A sharp, sudden move on breaking news. News-driven moves are different. They're fast, emotional, and unpredictable. My instinct was to jump in immediately. But I remembered day 4. So instead, I waited for the first pullback after the spike. Just like my usual pattern. That pullback came, and it matched my setup almost perfectly. I entered with my normal size. Not bigger, not smaller, just the plan. This time, the move continued further than usual. A 4% gain instead of 2. I took the win, closed the trade, and didn't get greedy for more. Balance after that trade. $168. The volatility continued through the morning, and so did my small, careful trades. Trade after trade. The same pattern, the same discipline, the same stop loss. By early afternoon, my balance had climbed past $400. This is where it would have been easy to stop being careful. I didn't. Same rules that got me here were the same rules that would carry me further. The volatility kept going into the evening, and so did the opportunities. One more strong pullback trade pushed my balance past $1,000, from $50 to over $1,000. But the week wasn't over yet. I want to pause here and be honest about something important. Results like this are not typical, and they are not guaranteed. This particular week had unusually high volatility, which created more opportunities than normal. Most weeks look nothing like this. Most scalping weeks are slower, smaller, and harder. I'm showing you this because it happened, not because it's the expectation. Scalping carries real risk. It's entirely possible to lose your entire starting amount. This video is for education, not financial advice, and past results don't predict future ones. With that said, let's finish the story. Back to day 7, evening, balance, $1,024. A few hours left in the week, I decided to keep trading with the exact same small position size. No exceptions. Bigger balance did not mean bigger risk. That rule never changed all week. A few more clean pullback trades added small, steady gains through the evening. One trade didn't work out, a small loss, caught quickly by the stop loss. That's normal. Even a good week includes losing trades. As the week's final hour approached, My balance sat at $2,100. I made one final decision: stop trading early and protect what I had. Knowing when to stop is just as important as knowing when to enter a trade. One final small trade closed out the week, pushing the total past $3,000. $50. 7 days, $3,046. But the number isn't really the lesson here. The habits behind it are small position sizes, consistent stop losses, patience between trades, and the discipline to walk away, even when the numbers were climbing. If you're thinking about trying scalping yourself, start smaller than you think you should. Use money you can genuinely afford to lose. Not rent money, not savings you depend on. Set a stop loss before every single trade, without exception, and track every trade, win or lose, so you actually learn from the pattern. Scalping isn't a shortcut to easy money. It's a skill that punishes impatience. This week worked out. Plenty of others wouldn't have. That's the honest truth. If you want to see how I track every single trade in detail, let me know in the comments. Thanks for watching, and remember, trade smart, not just fast.